Welcome to Family Hubbub. Get ready for an insightful discussion on the latest in the financial world. Today, we're going to talk about the BlackRock Bitcoin ETF, a major development in the cryptocurrency industry. This ETF is expected to make it easier for institutional investors to invest in Bitcoin, which could have a big impact on the price of the cryptocurrency. Before we proceed, I want to emphasize that I am not a licensed financial advisor. The information presented here is strictly for educational purposes and should not be interpreted as financial advice. Please seek counsel from a qualified financial advisor before making any investment decisions. What is an ETF? An ETF, or exchange-traded fund, is a type of investment fund that tracks the price of a specific asset or basket of assets. In this case, the BlackRock Bitcoin ETF would track the price of Bitcoin. This means that investors would be able to buy and sell shares of the ETF in the same way that they buy and sell shares of stocks. Why is this a big deal? The BlackRock Bitcoin ETF is a big deal because it is the first of its kind to be filed with the SEC by a major asset manager. BlackRock is the world's largest asset manager, with trillions of dollars under management.
This means that the BlackRock Bitcoin ETF could have a huge impact on the institutional investment landscape.
What are the potential benefits of the ETF? There are several potential benefits of the BlackRock Bitcoin ETF. First, it could make it easier for institutional investors to invest in Bitcoin. Institutional investors, such as pension funds and hedge funds, are often subject to strict investment guidelines.
These guidelines may make it difficult for them to invest in Bitcoin directly.
However, an ETF would allow them to invest in Bitcoin indirectly, without having to worry about the regulatory hurdles. Second, the BlackRock Bitcoin ETF could help to legitimize Bitcoin in the eyes of the mainstream financial world. Bitcoin is still a relatively new asset class, and it is not as well understood as traditional asset classes, such as stocks and bonds.
The approval of a Bitcoin ETF by the SEC could help to change this perception and make Bitcoin more attractive to institutional investors.
Finally, the BlackRock Bitcoin ETF could help to increase liquidity in the Bitcoin market. Liquidity is a measure of how easily an asset can be bought and sold. A more liquid market would make it easier for investors to get in and out of Bitcoin positions, which could help to reduce the volatility of the Bitcoin price. What are the potential risks? There are also some potential risks associated with the BlackRock Bitcoin ETF. First, the ETF is still subject to SEC approval. It is possible that the SEC could reject the application, which would delay or even prevent the ETF from launching. Second, even if the ETF is approved, there is no guarantee that it will be successful. The success of an ETF depends on a number of factors, including investor demand and the performance of the underlying asset. The price of Bitcoin can fluctuate wildly, and this volatility could make the ETF a risky investment for some investors. The BlackRock Bitcoin ETF is a major development in the cryptocurrency industry. It has the potential to make it easier for institutional investors to invest in Bitcoin, which could have a big impact on the price of the cryptocurrency. However, there are also some potential risks associated with the ETF,
and investors should carefully consider these risks before investing.
Thanks for diving into the exciting world of BlackRock Bitcoin ETF with us today. If you found this video informative and engaging, give it a thumbs up. Subscribe for more thrilling financial discussions. And don't forget to share the knowledge with your friends. And remember, every financial step you take today is a stride toward a brighter and more secure family future. Keep investing in your family's financial well-being. And let's conquer the financial journey together. Until next time.